Excellent. Trey, thank you for having me today. And Heather, thank you for joining us today as well. As Trey mentioned, normally Pete Stringfellow runs these Follow the Fundamentals, but we don't want to let him have all the fun. So today, Heather and myself are going to join. We have helped him in the past with these, so hopefully we look familiar to some of everyone here. But we're always happy to help out with Pete and really honestly love doing these sessions. Normally when we come up to do a session, it's a pre-planned presentation. We're going through a specific, presentation with not a lot of flexibility. The neat thing with the monthly Follow the Fundamental series is that this is all driven by your questions. So, so over the last 2 days, Heather and I have been preparing just by looking at all the questions that have come in, and that's really guided the presentation for today. So this makes it actually, honestly, more fun for us. So we'll kick off. I actually want to start with a question from James. So James was looking at the current levels of the S&P, right? Obviously, we've broken out to new highs on the S&P as well as some of the other indexes. And his concern is that valuations, might be getting a little bit frothy, a little bit too high, and that could mean that we're due for a large pullback. And a couple ways to look at this. I know Heather has a question from the audience that she's going to hit that really digs deeper into PE. But when you do think about PE, there's really two ways to lower PE, right? So one is obviously the price can come down, or the earnings can come up. So obviously prices have been coming higher, but with that, earnings have also been going higher. And so I actually was looking at some reports from Jurrien Timmer just last night, and here's what he had to say about that. So he said trailing earnings per share are up 4% from a year ago. The estimate for the next 12 months are rising as well. And then Q1 earnings season is almost done, as most of you are probably aware. And the growth rate from a year ago is up 7%. And that's also very similar to what we saw in Q4 of last year, which was also a pretty incredible quarter. So he says it looks like we're growing into these current valuations. So there's something to really think about. His other points were he's saying stay in May, right? A lot of you have probably heard sell in May and go away, right? Kind of as you prepare for the summer doldrums. So, he's looking at the fact that, hey, we're hitting all-time highs. We're in a bull market. So this might not be the time where you want to sell in May. So he's saying stay in May. Obviously we could still see some volatility. But the other thing he's also looking at right now is the fact that we are in an election year. So that also, historically should bode well for the rest of 2024 into the elections. So something to think about there as far, for anyone that is kind of concerned about, about the run up that we've had in the market. All right, next thing I want to look at is the Fed. We had several questions just asking about interest rates and the Fed. So let's look at that. There was, we're on Tuesday, but we already saw some Fed action going on Monday. So Vice Chair Jefferson said on Monday, it's too early to tell if inflation is slowing, if the current slowdown in inflation is long lasting or not, right? So inflation's been a huge story over the last few years. So obviously inflation is still, prices are still rising, but the rate at what they have been rising has been slowing a little bit. So that is good news. But again, that's just from one CPI report. So we want to see like, hey, is that going to continue or not? And then Vice Chair Barr also said yesterday that restrictive policies may need more time, right? So obviously interest rates have gone significantly higher than when we bottomed in 2022. And, when the Fed does raise interest rates, what he's basically alluding to is we might need to keep them higher for longer. And when it comes to looking at interest rates, my favorite place to look for this is the CME's website. And you can find this just by Googling CME Fed Watch tool. But the CME is the Chicago Mercantile Exchange, and that's where they actually trade the Fed funds futures. So professional traders who look at trading, what they believe the Fed is going to do, this is where you can see where they're positioning. There also gives you a nice dramatic countdown clock to the next FOMC meeting. So we can see that's in 22 days, 1 hour, 51 minutes, and 43 seconds. But so what are we expecting as of right now? And these can change drastically, right? If a report hits today, or a Fed chairman says something, outlandish today, this can all change by tomorrow, right? These updates, it updates every evening. But as of right now, what you can see from this, so we're clicking on the June 12th tab. So this is what they're expecting to happen at the June 12th meeting. So the current target rate, so where we are right now with Fed funds, we're at 5.25 to 5.5. So where they're placing their bets is with a 96% certainty that there's going to be no change at the upcoming meeting. Now, again, like I said, these can change drastically. If we looked at this tool in January of 2022, they were not predicting the rate and intensity of the rate increases that we saw in 2022. Now, obviously, as things were changing, they're adjusting very quickly. So this is kind of a gauge with the information known right now in the market. What is the expectation for rates? So this is a good place to go to see if kind of your expectations are on track or not. And then, of course, you can have an opinion that differs from them because they're not always right. So if we go out to the next Fed meeting, which is the end of July 31st, you'll see your 76% chance that we're still not going to see a change in rates. If we go out into September, here we can see, there's a 50% chance, sorry, a 35% chance that will stay the same, and there's a 50% chance that we could have a quarter basis point or a 0.25% decrease. So this is kind of what a lot of folks are looking at. And if we go out to November, we can see here, again, a 46% chance that we could be 25 basis points lower than where we are today. And if we go out to December, we can see here now there's a tiny little chance, hey, we might even get to a 50 basis points lower than we're sitting at today. But I think what people are most excited about when they look at these is there's no one placing any bets on another rate increase. So I think that's kind of where the market is excited right now is, hey, because there was talk, earlier this year, hey, maybe the Fed has to actually increase again just to get inflation under control. As of right now, no one in the market is really pricing that in. Now, if that changes, if all of a sudden the Fed says, hey, you know what, we're probably going to, inflation picked up again, we're probably going to have to raise interest rates, and all of a sudden you see these numbers changing, and all of a sudden probabilities are going higher for an increase, you'll see the market, potentially react to that, immediately. So that's why I do like looking at this tool, just to get an idea of, hey, what is the market currently pricing in when it comes to the Fed? All right, so that was kind of my quick market update that I wanted to start with. Now I'm going to pass it on to Heather to jump in and answer some questions as well. And I do apologize. Oh, you know what? Hold on. I'm not even paying attention to my notes. So let me show you one more thing before I transition to Heather. So this was actually a question from Simon, John, and Dee. They were asking about what sectors should we be looking at right now, which is a fantastic question. So let me show you here. So on Fidelity.com, we can go here under News and Research. And this is an excellent tab here, News and Research. There's so much that you can look at from the market standpoint from News and Research. But one of my favorite spots on here is Markets and Sectors. So let me show you one quick piece here before I jump into that question. So from Markets and Sectors, and again, just from News and Research. Yeah, so News and Research, and I apologize, we're on a demo account and it can run a little bit slower than our regular accounts. But you go to the News and Research tab and click on Markets and Sectors, and you'll see here on the right-hand side, we have Market Insights. So this is really an excellent spot on the site. So you have your quarterly market updates. So these are updated every quarter, but they cover everything going on with the market. So we can click on that little tab there, and this will bring up the quarterly market update. So this one came out on April 18th. So it's really looking at, hey, what happened in Q1? And, we do a great job on these. You got your key takeaways, hey, what were some of the big themes last quarter, what to look for going forward. We also have a video here as well with the analysts that put these together. And then you can go down below here and you really read the detailed report on exactly what it is that they're looking at. So this is a fantastic report to keep an eye on. You can also subscribe to the viewpoints, and then every quarter when these are updated, they'll just get pushed to you via weekly email. so you can keep on track of them. There's also this very cool interactive chart presentation. And so this is, many, many pages long, but this digs into a ton of great information. There are also some questions on there about, one question about international stocks. We'll get in here. We'll touch on the larger markets too, or so the larger international markets as well as the U.S. market. And then to answer the question from Simon, John, and Dee, the quarterly sector market update. So this is where you can go to get all of our updates on what's going on with sectors. So this report is also one of my favorites. It's from Denise Chisholm. She's fantastic. She's our sector analyst. She's been doing these for many, many years on our site. She's awesome. So I really like to look at these. And again, very similar format. You can get her key takeaways on what's going on. Since this one's only done every quarter, she actually just put an update in on this because obviously we haven't finished Q2 yet. So once Q2 is over, early in Q4, she'll come out with the new sector update. But she just gave us this update, earlier in May, where she's just really stressing, hey, the market looks good. Because we see a lot of clients kind of saying like, hey, when the market's doing well, we see a lot of clients that start saying, wait, things look too good. Is it time to cash out, or do I need to get more defensive? So she's kind of saying, hey, kind of like Urian, like stay the course. Things look great. So she's really reiterating this without getting too much into individual sectors. But then you can watch her video, and then also more importantly, if you download the full PDF report here, then she'll jump into all the sectors again like she normally does. But once we get into Q3, she'll do her Q2 update and then really hone in on, hey, what happened last quarter with sectors? What sectors am I looking at going forward for this next quarter that could do well? Awesome. So I'm glad I remembered to get that piece in there. And with that, Heather, I'm going to transition over to you.
Thanks so much, Michael. So we had a lot of great questions that came in, and certainly the majority of them we want to focus on how do we take some of the fundamentals that are available to us, the tools that are available to us here on Fidelity.com, and kind of put those to work. And so one of the things that Stacy actually asked about, and I pulled this question out because I think it's just timely, is about AI. So of course, AI is not a sector, but we also know that is the top of the news right now as we go into earnings for NVIDIA, which are coming out tomorrow. And so we know that that's actually driven a significant portion of what's happening within the markets in the last few months. So she asked a little bit about AI. I'm going to take it back to kind of the sector, just where you mentioned too, Michael, and then we're going to talk a little bit about some areas that we could use on Fidelity.com. And one thing that I wanted to point out about AI is that it seems to me that all of the companies are coming together, right? So the main focus is that, the more that we ramp up, the more that we invest into AI, the more that they contribute. So this is not just about NVIDIA, it's about Microsoft, like it's all the chip makers, AMD. In fact, CEO of AMD was just talking recently about how that AI chip market is expected to top 400+ billion by 2030. And, I'm certainly not in her shoes, but what I'd say is that might even be conservative, right? As we think about the growth in these particular areas, because all of AI feeds all the rest of the sectors that we have. So think about this. Healthcare, you have industrials, like everything, that we look at is going to be fed by the chips or AI, and how that actually can portray that. And think, for those of you who use ChatGPT and some of the other folks, there's some of the other areas, but all of those all of that news that we hear about is great. I think the one thing that we forget about too is let me take a step back and actually look specifically at what's going on in the stock. How do I eliminate some of the news and bring it back to the basics? So what I want to do today is share with you a couple areas that I think are important to take a look at. And we're going to talk a little bit too about PE ratio as well, because I think that's going to be relevant, or something that we would want to look at. In fact, I know that somebody had asked about the relevancy. I think it was Andrea actually that had said, hey, like, what's the importance of the PE ratio? Like, what should I actually be focusing on? And that should just be one of the metrics, because the PE ratio itself is actually just, and I think that you mentioned this earlier, Michael, the market price per share divided by the earnings per share. And it's a relative measure, right? So the reality is that you'd want to compare that maybe with like-minded valuation. So think again, if we're using NVIDIA as an example, could we look at its peers? Could we look at the industry level? And of course, maybe the sector level to get us a good gauge or an idea as to what the average might be. And so you're always going to have some companies in the mix that probably aren't doing as well, or maybe that they're doing better when you're thinking about NVIDIA, but that's kind of the basic place to start. And, one thing that I really like about it is it gives you an idea of maybe whether a stock might be overvalued or undervalued. But again, it shouldn't be used alone. It's got to be used in some other areas. So I'm going to take you to NVIDIA so we can take a look at that together, all of us, and show you some things that I think are really important to take a look at before you evaluate truly any stock. I think we're just highlighting this because of just all the hype that's going on right now related to NVIDIA itself. So first off, what you can see here is that you're going to get that detailed quote. So it's going to give you the general information, and it's going to highlight some areas that I think that we want to take a look at. Number one, the first thing was that PE ratio. So you see it 79.46. Well, here's the thing. I talked to a lot of people in my 20 plus years in the industry, and there's folks that actually will take these PEs and compare them to the S&P 500. I think that's okay to do as well. But when you have such a stock that actually drives the majority of the market, this is why I say, hey, take it back a level and look at its competitors or its peers. So this is one factor that you can actually take a look at. The other thing too is that you can go back in and look historically too at information. So as opposed to just looking at the overview, I can go into dividends and earnings here, and I can take a look historically. You can see beat right across the board for NVIDIA over to the right-hand side. In fact, if I hover over these, it will actually give me the report date and the estimates that were coming out. And of course, you can see the Q1 2024 is there as well. But what I like about this is that it actually gives you some of the earnings and metrics. And you'll see that it says GAAP here. A lot of people ask me what that means. It's actually just generally accepted accounting practices, so GAAP. So this is actually highlighting the earnings metrics to the sector or to the industry itself. And so again, this is a great way to try to get a little bit of a gauge. It doesn't mean that I don't want to buy NVIDIA, but it might mean if I take a look at the industry average or elevated. So maybe that's one of the factors that I take a look at. So for example, PE ratio, this TTM stands for trailing 12 months. You can also see a PE ratio of 5-year average. NVIDIA is at 79.38. Industry average is at 50.04. PE 5-year average is at 69.53. Versus the industry average at 50.48. And what's really nice about this is if we want to take it back to look at the price per share. Remember I told you PE ratio is the market price per share divided by the earnings per share, EPS, also known as. You can actually model the stock price using that. And now, just let you know that this is really education, right? So it's just going to give you a view or an average. So if I'm going to take a look at the 5-year low, look at that 34.22 5-year low PE ratio on NVIDIA. Both Michael and I certainly wish we'd put all eggs in a basket maybe back then. It probably wouldn't have been something that we should be doing or telling folks to do, but absolutely would have been great. But if you look here, I can take a look at the 5-year average. Right. So we'll look at the 5-year average, which we know is 69.53. I'll try to get the slider as close as I can to that. And it's actually going to tell you what that implied price might be. Now, folks, I'm not, again, telling you that you should put in a buy order at 829.02. Right. We have a lot of things coming out. We have the earnings are coming out tomorrow. There's an acceleration with chip makers. They're all combining together to put money into practice and go to scale AI. There was a huge consolidation of money to kind of drive the back end of that. So, while we're looking at this from a fundamental perspective, we also know that this is a hot topic right now, right? But it's nice to be able to get an idea to figure out overall what's an implied price versus the current price. And if I adjusted PE ratio, what might that look like? So as we think about those EPS earnings per share coming in, we might be mindful of the cost of each one of those particular stocks. So just so you know, I know that I talked a little bit fast, so I'm going to take this back a little bit more. What I did was I typed in the symbol underneath research and quotes, and below the buy and the sell green boxes, there's a list of choices. We started off at the overview, so I could just take a look at the PE ratio, and then I hopped into dividends and earnings. And then I slid over to the right to be able to see a little bit more information on that earnings. And you can certainly expand it out. So if I really wanted to do a nice comparison or take a look at overall estimates versus adjusted, you can see the information here as well. And of course, the market comparison. So for me, taking kind of back a level, I like to take the positions that I'm looking at, the stocks. I like to compare them to the industries. And I also like to take a look at the sectors. And then I take a look at relevant data, what's going on today in the marketplace. So this is a great place to take a look at. Again, I can break down the earnings detail, anything in blue on Fidelity. You can look at and see some great information there as well. You certainly can go into some comparisons side by side underneath top competitors. I like to do that as well. Maybe you're like, hey, listen, you know what? I'm not, even though we can do some fractional trading here at Fidelity, which is pretty cool. So like if you're not going to buy one full share of NVIDIA, if you're just getting started and you want a slice of the pie, that's one of the neat things about Fidelity. You can certainly do that from a dollar perspective, but maybe you're interested in taking a look at competitors. Remember I said before that most of these companies are all feeding together, right? They're trying to band together to make sure that they're all contributing to AI as a whole. So these are specific, of course, semiconductors and that you can take a look at, and then you can see, of course, other ways that you can invest in NVIDIA as well. So it's pretty neat. I'll show ETFs. We're going to talk about that today. But so I can click on comparisons. Statistics for those of you and those of my friends that love to go deep in the weeds from a valuation standpoint. I'm not saying that you need to look at all of these. This is a great place to be able to see the general key statistics, which include profit margins, growth returns, ownerships and insiders. And of course, if you really want to pull the financial statements and the SECs are all right here as well. And all of this, I think, is relevant. But it could take you a long time to go through all of these, compare it side by side, look historically. I've worked with some great people who have spreadsheets of all this information. For me, I think it's just a lot easier to take a look at the analyst ratings. Like Fidelity has the tools that you can take a look at. So I'm looking here at an analyst rating. I'm showing a very bullish on this particular stock. I can see all the history. I can also take a look at the different research reports available. So one of the great things about our offering here is that we offer unbiased independent research from all types of independent firms. In fact, I do know that if I remember correctly, it was Dominic may have been asking about some of these research reports and how they aggregate. So you can take a look at them side by side, each independent firm, or we can take a look at the very bullish, which takes a weighted average to the sector of all those standardized opinions from these independent firms. Now, each independent firm that we have a relationship with, Fidelity vets, but they also have their own way of coming up with their opinions. So what does that mean? Well, they might take quantitative or qualitative information and use it in the mix. So you're getting a really robust, view from different areas or different folks in independent firms that take a look at that. And I'll show you where you can see what each one of these firms do and how they come up with their opinions. But I wanted to make sure that you knew that you can actually see the reports for each one of them, which they all give you breakdowns compared to their peers. They'll take a look a little bit more deeper. You can see here it talks about EPS. I'm sure this is small on your screen, which of course we just talked about, right? That's the earnings per share. So I really like that. You can see price movement. Some of these even give valuation or averages over a 12-month period. So where do you think the price is going to be? So this one right here, 52-week price range. And it's talking a little bit about the historical valuation or the historical rankings that were there as well. So all of that's information. We want you to take a look at all the reports, but to quickly see what each one of these firms do, you're really going to have to go a little bit deeper. So I'll quickly click on this so that you can get an idea. So if you go back to our, let's see here, back to our overview page, you can.
Oh, I think you go to news and research stocks.
Yeah, I think I'm pulled one step further, a little further.
Yeah,
I typed in NVIDIA. So I got to go back to the homepage of News and Research. I got all excited about NVIDIA or taking a look at that just because of what it's doing to the marketplace today. Thanks, Michael. So News and Research.
That's what happens when we put Heather on the AI question. That's very excited.
You get right. I'll go all into it. So if you go into the News and Research and go to the stocks page, just go to the home page for stocks. Up here at the top next to the Spreeder tools, if you click on research reports, this gives you a definition of every single one of our research providers. So what's really nice here is it tells you, well, what does Argus do? Well, they use a fundamental analysis, right? So that's what we're talking about today. How do you use some of the fundamentals? How do I find that information out? And they will give you information, related specifically to that. And then, of course, technical analysis. I know we'll touch base a little bit on. We're not going to go too in the weeds on that. But each one of them uses the that we have here. You can see the fundamental analysis, and then they use either quantitative, qualitative approaches and analyst driven. So again, all of these together is what we want to take a look at, and you can formulate your own opinion. It's horrible to take one person's opinion unless you are going to follow their entry and exit points. And what I have found in my history is that, like most firms, even those newsletters that we subscribe to, they give you entry points and they never give you exit points, or you miss it because you're doing something else. So this gives you the ability to take a look at that, each of them first. Now, not every stock here at Fidelity is followed by all of these research firms, so don't get worried if it doesn't pull up. But it might make sense to kind of take a look and see what research firms are available and to be able to determine that. So PE ratio is relevant. It's not the only thing that you should be taking a look at. I think it's great to go to the granular level or to go one step lower if you take a look at the sectors and the industry levels. So even if I go back to NVIDIA and I wasn't sure what sector it is, I think we all know where it's at. I can actually pull that right from any stock that I pull up. So it'll tell you at the bottom of each one of the pages. So where does this fall? What's the company profile? And you can see over here, it'll say company profile. I can go right to information technology or semiconductors equipment, and it brings me to the page, Michael, that you shared with us, but it just isolates it right over to that particular sector. So take a look at the sector overall and the valuations and some of the things that are going on with that sector. Take a look at the the comparisons of the stock. So you saw me pull that up side by side. And then take a look specifically at those sector fundamentals, which you can see right here. So things like EPS growth, revenue growth, all of these are important to take a look at. And if you're really not sure which way to go, or if you want to look more information or look a little bit deeper, you'll notice over here to the right, it even says, we have some pre-built models that will highlight some of those areas for you too. So you can actually see some of those Fidelity basket portfolios that are there. So I think I pretty much touched base, unless I missed anything on some of that Q&A as it relates to how to take a look at research a stock. Start with the sector, take a look at the overall, listen to Fidelity's, research reports. We have some sector funds, and our fund managers put out information all the time. You have Denise that comes out with a quarterly update. We want to take a look at what's going on the market level, the sector level, take a look at the sector fundamentals, and then take that and compare it back to the stocks itself. Use that PE slider that I shared with you before to be able to determine, does this look like it's overvalued? Is this too much? It's going to cost me a lot more than it might on an average. But be mindful of things that are happening, right? As AI continues to grow, to your point earlier, Michael, you're going to see some of these valuations continue to go a little bit higher and potentially level out. So,
amazing.
Did I miss anything? I don't think I missed anything, right?
There might be one thing, but I'll hit it in a second. But Heather, that was amazing. Thank you. I love doing these presentations with other folks that I work with. I joined Fidelity just over 20 years ago in 2003. And I kid you not, I had never seen that PE slider before with the 5-year average. See, so even so we can't expect our clients to know everything that's on Fidelity.com because there's so much on here. Someone actually once told me many years ago the amount of pages on Fidelity.com. This probably went back like 10 years ago, and it was in the millions of pages. There's so much on here. So the goal of these presentations, we just hope you take, obviously we can't expect you to take everything out of this, but if you can just grab a couple of nuggets to help you out, I think that is success. All right, I'm going to take over the screen share, Heather, and then I think you've got the first question for me. And actually, before I do that, I might have gotten lost during your session. Did you get Swantha's question about which fundamentals to prioritize? Because I can cover the S&P Global Intelligence piece real quick if you didn't catch that part.
I actually didn't show that. I think that's a great way to kind of start off with, and I think that
Yeah.
also goes into a question about advice for beginners, which you're going to ask me. But let's show them where you can see the S&P intelligence. So you can take a look at the sector fundamentals where I showed you before. Take a look at the stock, and then
So I'm going to just throw an Apple here just to switch it up a smidge, being based in the Bay Area right next to Cupertino. Yeah, so from here, and so there were actually several folks had questions kind of, right? There's so many fundamentals to look at, right? So which, we're getting lost. Like, do we just focus on PE or what else do we look at? So I think this one's really neat. And if you go over here to this tab here, which is sentiment. So first you put in the stock you want to look at, and then you go and you look at sentiment. And so this is this left box here, which is the fundamental analysis. So this comes from S&P Global Market Intelligence. And essentially but what they've said is, we've gone back, looking at decades of data of research that we've done, and we've really broken it down into these 4 areas. So these are the 4 areas that they think are the most important to look at, right? So it's valuation, quality, which really think of that as earnings quality, growth, stability, and then financial health. So valuation, this one actually goes, this plays right back into PE, right? So and a higher score is good. What you want, in an ideal world, you'd have, 100 for each of these. 100 is perfect score. Now, it's not realistic to get 100 in each category. But valuation is how, so Apple being a technology company, how is Apple's current valuation compared to other technologies, right? So if Apple is considered cheap amongst its peers, it will have a higher score. If it's considered expensive amongst its peers, it'll have a lower score. And then how are the earnings quality, growth, is the stock growing or not? And then financial health. And I think a good example of this, I remember back, this goes back, 14 years or so, or maybe not, sorry, about 8 years ago. So about 8 years ago, so obviously Apple, when the iPhone came out, that really changed Apple's business. And then Google was fighting back. They purchased Android, and they were advancing their phones a little bit quicker all of a sudden than Apple was, right? They had bigger screens, longer battery life, things that the consumer really wanted. And it was actually taking a toll for the first time on the iPhone. And so when you pulled this up, so a couple of things that were interesting. One is when you looked at the equity summary score, right? So the stock of Apple had gone from this is pre-split, from about 700 to below 300. And then all of a sudden, all the analyst scores were bullish, right? So stock is coming down, just going lower, lower, lower. The analysts all of a sudden were getting very bullish on Apple. And when you came into this screen here, the growth, kind of like today, the growth was very low, but the financial health was high. The valuation number was high because the PE, the price had come down significantly, but the earnings were still, the earning quality was still strong. So it was getting very inexpensive. And what the analysts were all looking at was the fact that, hey, they're coming up on a new product cycle. They're about to launch the iPhone 10, which is going to have a bigger screen, better battery life. So even though, from a technical standpoint, which I know is the next question Heather's going to ask me, it was looking pretty terrible, right? The stock was hitting lower lows and lower highs. So the technicals were terrible. The fundamentals were showing, hey, the fundamentals are strong, but growth has stalled. But then when you were looking forward-looking, by looking at the fundamentals and reading the reports from the analysts of what they were projecting was, hey, new product cycle that could really change things around, because in addition to iPhone, they're also coming out with new MacBooks. So that was an area where the technicals were kind of failing, but the fundamentals, the forward-looking fundamentals were saying, hey, things could really be changing. That was an amazing time to be getting long on the stock.
I like that you brought that up. I like that you brought that up, Michael, because I think, to sum that piece up, when we think about PE ratio, I know I'm keep going back to that. It doesn't account for those growth rates, right? So when you think about high growth companies, just like you mentioned, explain that Apple thing, they may have high PE ratios. So that component should really be taken into consideration, overall. So it's not just that PE. I think if you click on more, it even breaks down multiple comparison, or not comparisons, but things that you would be taking a look at that. So now as you're talking about your operating cash flow, so forth, how do all of these relay back into the valuation or the quality and the financial health. So this is a real great place. I feel bad that I had missed it. So I'm glad that you brought it up, because this does give you anything in addition to just not looking at the PE ratio, right? So bottom line is there's a lot of things to take a look at if you're really wanting to look at a stock and evaluate them: valuation, quality, growth, stability, and financial health. All the 4 buckets here are really the most important things, in my opinion, that you would take a look at. And of course, it'll be on an individual level, very specific of whether you weight one area or another. So sorry to interrupt you there, but that kind of fed right into it.
And you can also click here to learn more about S&P Global Intelligence and this specific sentiment and analysis piece. So, but I think this is really good, and I think it kind of addresses the fact, like, we can look at, I can look at the 10K on a company, and there's so many, it's overwhelming, pages and pages and pages of financial data. So I think that the S&P does a good job of kind of summing it up into these kind of 4 points. So, hey, these are the most important things to look at. And then just realize, that these can change. So I think that's kind of a really important one. So, all right, Heather, you want to kick off the Q&A?
Yeah. So, and you touched base a little bit on this, Michael, but Bruce asked specifically about, okay, blending fundamentals and technicals. Like, where do I weight them? How do I take a look at that? So talk a little bit about why it might be important to take a look at the 2 of them, or should I weight one over the other? So maybe you can highlight expand on that I know that you were touching base on just a moment ago.
Thank you. And I do love this question. So thank you for it, Bruce. And, also going through the questions, there were a lot of new folks on here, just saying, hey, this is my first time attending, or I'm just getting into investing. So just kind of take this back a step, right? When you look at, we're on the perfect page here, right? So when you look at folks that invest, sometimes you'll see they fall into 1 or 2 camps, right? So you can have the fundamentalists, and they're the ones saying, and just to break that, so fundamental analysis means you're looking at the numbers, right? You're looking at the PE ratios, you're looking at earnings quality, et cetera. Technical analysis, or the technicians, it means that you're looking at the charts, right? So you're looking at the stock charts, and you're looking at, you're using them as a map. Okay, here's where the stock has gone, or here's where the sector has gone, or here's where the index has gone, and I'm going to try to use that past history to extrapolate where things may go in the future, right? Where might the stock hit resistance? Where might there be support if the stock is dropping, where it's a good place to buy? So historically, most investors will fall into 1 or 2 camps, right? So the fundamentalists, they say, you know what, I don't care what the charts say. That's kind of black magic. That's mumbo jumbo. That's all old news. And then some chartists will say, hey, you know what? I don't care about the fundamentals. Everything fundamentally known about this stock is priced into the chart. What I have found after working with self-directed clients for over 2 decades is the ones that are usually most successful, kind of to Bruce's point, are the ones that blend these 2 together, right? So they'll turn to the fundamentals to say, hey, what are the sectors I want to focus on right now? And then some will leave it there. And then they'll use like an index fund, like an ETF, to focus on like semiconductors, or to focus on tech, or to focus on healthcare or biotech. Others will go deeper. They'll say, you know what, it's not just good enough that I want exposure into semis or biotech, but I want to go and try to find, hey, what are going to be like the 5 best companies that are going to do the best in semiconductors? I'm going to focus on those stocks. Or what are the 5 that are going to do best in biotech? I'm going to focus on those 5. But either way you do it, you look at the fundamentals to determine, okay, what sectors have the most opportunity, or what companies have the most opportunity going forward based off of product cycle, or valuate, or expectations of how much other S&P 500 companies are going to have to spend on your product going forward for the next 5 years. So that's kind of the fundamental side. The technical side, the technicians that are looking at the charts, they're really honed in on, okay, what are the patterns on the charts? What are the, and the main things you're looking at there, is support, resistance, and then the trend. Is the stock, trending higher, or is the stock trending lower? And then you can also add, just like fundamentals, you have a ton of different fundamental points you can look at. You have a ton of technical indicators that you can add on there. Some of the common ones you may have heard of, moving averages, relative strength index, volume, And then there's also like all different types of chart patterns or candlestick patterns that you can also overlay and look at on your charts. But so there's a lot in both. But what I found after 2 decades working with self-directed clients, the ones that do the best are the ones that will marry the two together, right? So they're looking at the fundamentals to determine, hey, what sectors and stocks do I want to be involved in? Then they turn to the technicals or the charts to see, okay, hey, is this a good buying point? Is it overextended? And I'm just would be chasing if I purchased right here. I want to wait for a pullback. So I see some resistance, at this level. So I'm going to see what happens. If it breaks through the resistance, a strong volume, then maybe I'll use that to buy. But they're kind of combining the two together. And that I think is really important. And it's kind of funny as I was looking at all the questions, right? So this session today, follow the fundamentals, right? All on fundamental analysis, right? As Heather and I were going through the questions, about 30% of the questions were about technical analysis. People asking about support levels on the market, what technical indicators to look at. So there's obviously it's hard to do one without the other. And then Trey, I know that we do have some upcoming sessions that focus just on technical analysis. So I don't know if there's any way maybe you can post those maybe in the chat for the webinar, but that could also help. And at the end, we'll show you the Learning Center, and you can also look at the Learning Center to see tons of research on technical analysis, and also where you can see upcoming technical analysis events. Okay.
I think it's pretty cool, Michael, because the choice is up to you. For me, I might lay a little bit more heavily on the fundamentals of my decision if I'm holding for a longer term. So it may not be 50-50. I might not say, okay, 50% of my decision is going to come from the fundamentals and 50% comes from the technicals. What I'll really look at is I might weight higher on the fundamentals if I'm going to hold this for 2-3 years, right? I'm looking for something a little bit different. If I'm a shorter term investor, so I'm really looking for momentum, something really short term, I might take a look and weight my decision a little bit more heavily on the technicals that are out there too. And I do think it's a personal decision. I love your comments where you talk about marrying them together, because you still need to figure out potentially, what we wind up doing sometimes is we buy high and then sell low, right? It's just because our emotions get in touch with it. So the technicals, the charts are really important, at least the fundamentals of that, of understanding how they work, so that you try to get away from that emotion a little bit more. And you really do focus on what is my entry point, and what might be my exit point. So that entry point, the charts might be able to help you out that a little bit more for that pattern recognition potentially. Obviously, you don't want to miss an opportunity either, right? So again, it's a balance, but you really have to figure out, maybe thinking back to how long, what am I looking to do with this stock? So we always talk to you, Fidelity, here about your goals and your financial picture. Take that to the next level and say, what are my goals and specifics as it relates to that stock? And I know we'll go into that a little bit more on another question, but I love how you put the two of them together, Michael. I think that's perfect.
Yeah. And that was actually a really good point you made as well, Heather, right? So a lot of the shorter term, like day traders and technical traders, they'll focus more heavily on the technical analysis. If you're just if you're young and you're investing for your retirement, which is 40 years out, right? Honest, and you don't want to go if you're going like, hey, this is all overwhelming. Like, what are these two crazy people talking about? Right? You don't have to make it this complicated, right? You can go in and you can just, do something simple, like even like a target date fund, and not even look at this, and just continue to pile money in, year over year. And, in 40 years, when you're ready to retire, you should be in fantastic shape. When you're really getting as granular as Heather and I are going through today, this is really more for the clients or for the investors out there that are like, hey, I want to really be involved. And again, for the folks that are starting out, if you don't have the background in this, or if a lot of this isn't really clicking, what I would always, when I was working with clients, what I'd always recommend to them is a core satellite approach. Some people will call this core explore. And it's like, hey, great, you want to be involved and you want to, make your own decisions, you want to do your own research, that's fantastic. But if you don't have the background and the experience, or even the time to do this, what you should think about is start with a core. So think of the core as the Earth. And then around the Earth, we have all these satellites orbiting the Earth, right? So the core is kind of your nest egg. So if you don't have the experience, maybe that core, that could be something that's really diversified and balanced, based on your time horizon, based on your risk levels. And then you can have fun with the satellites, where that's where it's like, okay, you know what, I'm going to, these smaller, so maybe your core is like 80%. And then maybe you'll say, okay, I'm going to have 4 satellites, 5% each. And maybe that, I'll have an AI satellite, or I'll have a technical trading satellite, or a day trading satellite. So if one of those satellites does extremely well, fantastic. It's going to help your overall plan. But if one of those satellites gets knocked out of orbit, right, you're still going to be okay because you have that nest egg to fall back on. And so, we can help you with that. Let me just show you one thing kind of to help maybe set up these cores. If you want to do this more on yourself, now exactly, if you're like, hey, I don't even know what to do, you can come into Fidelity. We can help you. We can manage that core for you, let you do your own satellites. But if you really want to, kind of take that core on for yourself, let's just look at ETFs real quick. There were some questions about ETFs in the, as we were prepping for this. But we've added this newer tool, which is really neat. And again, just news and research, ETFs, which stands for exchange traded funds. And it's the ETF portfolio builder. And so you can literally go in here and you can say, all right, what is my, what type of portfolio am I looking to build, right? So you can go, as aggressive growth, right? So if you are, younger, you've got a lot of time horizon, or, if, you're just a more aggressive investor, you can go to aggressive growth. There was one question from someone who was basically, I just want my money to grow, but I don't want it to go down, right? You can go and you can be, you can be very conservative, right? Where the odds of having to when the market is volatile, the odds of having your portfolio fluctuate too much will be lower. So you can go anywhere on this spread. Let's just say let's go with something like a growth portfolio, and you'll see it's going to put together a portfolio for you. That's a 70-30 portfolio. So 30% bonds, 70% in stock, and it's going to give you a combination of U.S. stock with some foreign stock. And you can go down here, and it'll actually show you here, which ETFs to buy and what percentage of your money to put into them. And you can do it with Fidelity only ETFs, or also iShares and Fidelity, which candidly is usually the one I choose. We partner with iShares; they're a market leader in exchange traded funds, so I think it's kind of nice to get the best of both worlds. And here it'll literally tell you, hey, go in and buy these ETFs and put this percentage in on each of them. And if you want to actually do this, you can hit continue, and you can put in which account you want to do this in, the dollar amount, and it'll actually calculate how many shares or what dollar amount to put in each of these. So we definitely have, if this is too complicated for you, we've got your back. If you want to do something as simple as setting up your own model, but again, you do have to kind of manage this, right? Because in a year from now, you're going to have drift. Your bonds might, if the market continues to really do well, your 70-30 portfolio is no longer going to be 70-30, right? So then you've got to do a rebalance, which is manageable, but there's things to consider. If it's a taxable account, you want to consider, hey, if I'm selling something at a gain, is it a long-term gain or short-term gain? Because obviously you don't want to have tax drag on your portfolios. But again, we're here to help with all of that. All right, so kind of went off the rails there for a moment. Let's get back into the questions. All right, so let's see. Wei asked, I think I kind of actually just hit that by accident. Advice for beginners. So I think, Wei, that is my advice for beginners. Would be, some sort of core satellite approach. And for that core, we can help you with that, or you can use a diversified basket of low cost ETFs. To put that together. These are very inexpensive portfolios. There's no cost to buy the ETFs, and they just have small overall expense ratios.
I'd love to add to that, actually, Michael. I think, and that may actually feed into another one of our questions, which is, taking a look at your portfolio from a fundamental. I think goes back to what's the next best thing. This is an area. It's kind of like a cheat, I call it. Right. So all these clients that I have worked with in the past, they say, I don't really know where to start. I don't even know what to look at. And even after today's session, you might say, geez, that's great. I just learned my PE ratio is not the only thing I should look at, all these other things. Let me share with you. If you go to news and research and you go to stocks on that homepage, remember, this is where we found all that neat information about the research providers. There's an area that says screener tools on the left. If you click on screener tools and click on start a stock screen, Now, for those of you who are really advanced, you can create your own really cool stock screens, put in Excel, all types of neat things on here. But this is literally all the types of criteria that you could look at when you're evaluating a stock, which is incredibly insane. Like, this is just a lot of information. But going back to what we said before, like, if you know what your objective is, or kind of know what your objective is, you might lean towards some of these little areas a little bit more differently. Now, for me to cheat, what you could do is say, all right, well, if I click on strategies and I'm more focused on technicals, what would the experts look at? So this is provided by, in this case, Zacks Investment Research. So if I clicked on bullish chart patterns, for example, on the left side of your screen, you can see some of the criteria that they use with the objective of finding stocks that have bullish chart patterns, right? And you can add and customize this. We're not going to spend too much time doing that today, but quickly I know, okay, these are some of the things that I can look for. Now, I'm going to do this on a fundamental perspective as well. So if I went back to that home page and I said, you know what, I don't want to do technicals. Let's take a look at maybe growth and value, right? So income and growth, that's always popular. It's something people look at. Again, powered by Zacks, one of our independent providers. If I clicked on income and growth, on the left side of my screen, it's going to give me a list of criteria that Zacks uses in order to meet the objective of finding a stock with income and growth. And you can even add your own stocks to compare it. I know that was a question that somebody asked before, like, hey, what if I got a loser in here? How do I take a look at that? Hey, it may be a loser today, but it may not be a loser in 6 to 8 months. You got to look back at your time frame, but you could compare your stock to this. So going back to what's important to you. And what I like about this is that it gives you the ability to compare these stocks side by side, right? So I could weed these down, find a needle in a haystack, but in the end, if I'm looking for a growth and income stock, what would be my criteria? Well, let's look at our research providers, lean on them and figure out what they use. And then you can see off to the left-hand side, this is what they look at. So in order to come up with these stocks, these are the objectives that they did. Now, you can go in and expand these out, by the way, and say, well, I don't want to have some crazy growth rate or low growth rate. And I could say, let me look at the ones that are medium and look at the earnings per share 3-year history. And it even tells you what the market median is. So like, yeah, if I'm at 55, that's pretty high. I can also go back in, and as you know, we talked about sectors. I love sectors, right? I can go back in and add sectors, but you can find needles in the haystack. You saw that huge list. I just narrowed down to just one, right? So you still need to do your due diligence on the stock, right? Just because it falls under the category. But this is a way that you can actually cheat and kind of take a look at some of the things that are important. And then I'll show you one other thing in here, and then we'll move on to another question. When you're inside of, or if I clear all up here at the top, and by the way, you can save those screens. Every time a stock meets a criteria, it'll show up in there. So it's kind of, it's always fluid. But earlier we talked about themes, and I know I'm coming back to that AI. But if I click here, you can actually take a look at some of the basket portfolios we talked about earlier, and there's a robotics and AI one. Again, this is a hack or a cheat, whatever you want to call it. For me, I use this particular area so I can look at all of the stocks that fall into this category. I'll take a look at it compared to the S&P 500 so you can see the chart. So this is a list of a model allocation of all the stocks that make up this theme, right? AI robotics. And you can see you got Snowflake, AMD. I talked about AMD earlier a little bit, NVIDIA, and so forth. But look, quick stats, exposure, and related news. I get all my news on AI right from here. And I can pick and choose those stocks and compare them. So this is what I call a hack. You can look at the experts and figure out what they're looking at and using for their set of criteria. You could use a theme and take a look at the basket of stocks together, all in one place underneath the stock screeners. So just wanted to kind of share that over.
That was perfect. You also answered Jamshed's question there about yield. So that is that stock screener is a great way to go in to look at yield on stocks before you buy them. Now, Heather, we only have about 2 minutes left, so we got to land this plane. Will you just show us very, very quickly, since you have the screen share up, the Learning Center? And I think that will be a great place to wrap up.
Absolutely. So there's no, you're talking about combined between Michael Pollock and I, 40 years 40 plus years experience in the industry. And every day there's something new that comes up. In order to keep apprised of everything, the best way that we can tell you to do it is to go to the News and Research and the Learning Center. And be mindful, I mean, this is vast. So we work with clients that are extremely advanced day traders, right down to somebody who's just buying their first fractional share at one time. But if you're really trying to figure out specifics related to some of the fundamentals, you can search here from the Learn, or I like to go over here to the left underneath events. By the way, this is where you can see the on-demand webinars, upcoming events. And I even go into the trading strategy desk, coaching and classes area. They have some great classes available. These are free. They are complimentary. We want to help you learn and understand. And one of the things that's really cool here is that there's a section on technical analysis, and there's one on trading basics, which includes the trading plan, research, and analysis. So if I clicked on one of these just so you can take a look at it, expand it out, it will tell you each week what's going on. And these are 4 week classes. They're very small and limited, so you want to sign up and register for them as you see fit. So pretty neat to be able to see that, the breakdown of each one of those. But I think that certainly some of you could benefit.
One thing to add real quick, they're monthly series, right? So you want to join at the beginning of the month or register at the end of the month for the following month. So you catch all 4 sessions because they build upon each other. Yep. And you'll actually have homework in between the classes. But these are, like the webinar we're doing right now, obviously we were able to read all your questions prior, but it's just Heather and I talking, right? You can't really interact during the webinar with us, but on these you can actually interact with the presenter, with the coaches. So those are really great, smaller, more intimate, and a little more interactive.
Absolutely.
Well, fantastic. I just wanted to thank everyone again for taking your time out of the day to join us. Thank you again, Heather, for doing this with me. Like I said, I actually, I always learn something whenever I see you present. So thank you for that. And Trey, thank you for organizing all this and keeping us on schedule. Thank you, everyone.
Absolutely. Yeah, I just want to say thank you, Heather and Michael, for joining us. Great stuff. And just a couple reminders for our audience as well. Take a look after the webinars over. We'll send a quick thank you email out with some of those additional links and resources. We did have a lot of people ask about the recording of this show. This show, unfortunately, is not offered as a replay, but the good news is we do it once a month. So we will be back on June 18th. If you want to sign up for that one, you can click the button below your viewing page or head to fidelity.com/webinar. But we'll close it up from there. Thanks again, everyone.
Take care.